you, transfer the money. Why is it not in the account yet? I can't believe this. You're gonna hear from my attorney. All right guys, Penthouse Finance, next video. Let's go. Welcome back to Penthouse Finance, guys. My name's Aaron. I'll be your host for today like I am in every single video. And in this video, we're talking about how to invest your first $1,000 and 5 interesting ways to invest that money. So let's jump straight into the video. But before we do that, don't forget to smash that like button. Smash it really hard. Smash it hard for Penthouse Finance. Make sure you guys hit it and hit the subscribe button. Actually, smash that one harder because it's a little bit more important. Wanted to introduce someone to the channel today, guys. His name is Doc. He's a behind the scenes man, and he's gonna be giving us all these special effects. So anyways, if I refer to Doc, it's our main man. He's the editor, and let's jump straight into this video. So first thing I wanted to talk about was the stock market. Everybody hears about the stock market. Oh, there's so many different types of companies out there, high-risk companies, dividend-paying companies. But which companies do we pick? And if we had $1,000, how would you invest that into the stock market? The first thing I'm gonna tell you guys is it takes money to make money. All right, Doc, let's get a nice little quote up there. Show them, it takes money to make money, but it's true. So it takes money to make money. What does that mean? You need a lot of money to make lots of returns within the stock market. So I'll be honest with you guys, with $1,000, I would recommend making a couple investments, unless of course you're using like a free trading app like Robinhood where there's 0 commission fees and you can buy individual stocks. Even if the stock's like $5, you can buy one at a time. I think that's fantastic, and that's definitely where things are going. In that case, you could take $1,000 and diversify it across many different companies, but it all comes down to what are your brokerage commissions. I personally still pay $9.95. But anyways, hopefully Robinhood comes soon to Canada, or there's any free trading apps in Canada. Let us know in the comments if there is. But long story short, there's different types of companies on the stock market. So my investment strategy in the stock market focuses on about 4 different types of investments. We got growth companies, we got dividend paying companies, we got ETFs, and we've got those defensive companies that hedge your portfolio and protect against a market downfall. Whoa, it's getting sunny over here, guys. So we're gonna move to the other side and keep talking about investing in the stock market. I'm gonna start with those growth stocks that we talked about. Growth stocks are companies like Amazon that don't pay a dividend, and you're banking on the company to grow. In Amazon's case, capitalize on the e-commerce market, and hopefully that share price goes up so you make a return. Now we're gonna get into the dividend paying companies. So dividend paying companies are more stable businesses, like for example, an oil company or a power electric utilities company that supplies power to the masses. Their business is very predictable. It's not gonna grow a lot, but they do pay something that's called a dividend. So Doc, bring up the definition for dividend. So basically a dividend is when the company shares a portion of their profits to their shareholders, whether it be monthly or quarterly. Dividends usually range anywhere from 3 to 6% if you're lucky, but be cautious if you see a company that's yielding 10, 20%. That generally means that if the industry standard is 5 to 6% and the company is yielding 10 or 20%, usually what that means is the share price is tanked, the company's in trouble, and they just haven't cut their dividend yet. So be careful when it comes to that. And it goes back to that saying of sometimes it's just too good to be true. And that's true. Next, we're getting into ETFs. ETFs, one way of buying a diversified basket of stocks with a very low management expense ratio. So you will pay anywhere from 0.15 to let's say 0.75% depending on the basket of stocks. It's pretty much the safest type of investment if you want to completely diversify and buy a whole bunch of companies. That brings us to the last type of investment on the stock market, which are defensive companies. Companies like gold and silver miners that generally tend to outperform when the market is tanking. So it's one way to hedge your portfolio. So what does hedge mean? Well, Doc, pull up the definition for hedge. Basically, when you hedge your portfolio, you try and minimize the amount of volatility, and you also invest into some of those defensive companies. So gold and silver miners tend to be very defensive, and it's a great way to hedge your portfolio. All right, guys, we're moving back over here because the sun has seemed to have subsided for now, And I guess we spoke too soon. All right guys, moving on to the second type of investment, and those are bonds. Bonds are pretty boring, to be honest. They're very safe, and in the current environment where interest rates are still very low, bonds don't really yield much, anywhere from 2 to 4% if you're lucky. But basically a bond, all you're doing is you're lending a country or a business your money. They're giving you a piece of paper, it used to be a piece of paper. They're giving you a piece of paper back saying that we'll pay you guys back in a year, in 2 years, in 10 years, and here's the interest that you're gonna get because you lent us your money. So bonds are a really safe way of investing, kind of boring, not really for me, but if you're looking to diversify and you feel like a recession might be coming up, that's one way of parking your money somewhere, get a little bit of return, and you can sell those bonds later and invest it into something else. But we had to say it, it's not our favorite, but there are bonds out there. The third type of investment is real estate. Real estate, you can make a lot of money because you're using financial leverage. Bring up that definition, Doc. Let's see it. Financial leverage is when you use debt and not fresh equity to generate returns. So in terms of real estate, when we're talking about financial leverage, you put 5% down on a house, the bank lends you the other 95% in the form of a mortgage. And right there, you have 20 times leverage. So you have 20 times leverage, and if that property was to appreciate by 5% the following year, you would essentially have made 100% because the value went up 5%. Now coming back to that $1,000 investment, how the heck are we gonna buy a house for $1,000? There are some government funded programs that will assist first-time home buyers, but when it comes to buying real estate, I would encourage you to save up a little bit more money, not to mention having a reserve fund for that real estate in the event of, the roof breaks, you gotta fix your appliances, all that bad stuff that can happen that goes along with owning real estate. But my best advice is buy some books on real estate, take some courses, learn about real estate investing first, and then of course, save up more and invest in real estate. What's up? All right guys, that brings us to our fourth topic, and that is gold and silver. We talked about gold a little bit before. Gold is a very interesting hedge when it comes to your portfolio for being defensive, and it protects against inflation. So guys, buying physical gold, gold bars, silver bars, gold and silver coins, there's so many different ways to invest in gold and silver. And if you're a defensive investor looking to further diversify, and it's actually kind of cool because when you have a gold bar, like a big gold bar like this, it's fun to hold, it's worth a lot of money, and it should hold its value in the future. So that's one other option. Now when it comes to the price of gold, right now it's currently around 1,500 USD per ounce of gold. You can buy gold in smaller denominations. You can also buy silver for about 17 to 18 bucks an ounce. Silver tends to be twice as volatile as gold, which means if gold goes up 10 bucks, silver will usually go up maybe 20 bucks or even 30 bucks. And that's because silver is cheaper, but the amount of silver available in the market is actually less than gold. So very interesting. All right guys, so we saved the best for last. What's the best and the fifth way to invest that $1,000? And to be honest guys, it really comes down to education. So I would recommend someone who has $1,000 to invest in themselves first before they invest in the stock market or real estate or anything else, to be honest. So go out and buy those books on finance, take some courses, just learn. When it comes down to it, just learn what you want to know, just learn what you're interested in, learn about the stock market, learn about real estate, and then dive into it, save up more money, and have a better plan to do it. A recent study done in Doc, you can pull that up right there, says the average CEO reads 60 books a year, which is pretty hard to believe. That's more than one book a week. I would like to see the actual results in that, but if it's true, and I know that CEOs read a lot of books, then those are some of the most successful people. So why not follow the most successful people, start reading. I actually got to get back to reading because I've been slacking a lot because I've been too busy making these videos for you guys. But I'm actually gonna have to end this video soon because I got to go read this book that I'm reading. Art of Seduction by Robert Greene. Fantastic author. Robert Greene is amazing. 48 Laws of Power, Mastery, and the Art of Seduction. 3 best books that I've ever read. So check out those books. All right guys, that brings us to the end of this video. I want to thank you so much for watching. Don't forget to hit the like button, subscribe if you haven't already. I hope it was helpful. I hope we entertained you guys, and we look forward to making more fun and exciting educational videos in the future. So drop us those comments below, let us know those future topics, and we'll see you in our next video. Are you serious right now? I told you, transfer the money. Why is it not in the account yet? I can't believe this. You're gonna hear from my attorney. You're gonna...